Welcome to the Margin Call, where market mechanics meet strategy.
Open your bank account right now. See that number? The $1,000 sitting in your checking account doesn't actually exist. Not as cash, not in a vault, not anywhere. It's a promise, a number in a database that everyone has agreed to believe. And that one belief holds up the entire global economy. Today, I'm going to show you the machine that creates money out of nothing, and what happens the moment people stop believing in it. For most of history, we imagined banks like this, a steel vault stacked with gold and cash, every dollar you deposited sitting safely inside, waiting for you. That's the myth, the picture banks want you to have. But peek behind that vault door, and here's what you'll actually find. Banks are only required to keep a small slice of your deposit on hand, sometimes just 10% or less. The other 90% loaned out to someone buying a house, starting a business, paying for college. Your $1,000 becomes someone else's loan the moment it hits the system. Banks are only required to keep a small slice of your deposit on hand, sometimes just 10% or less. The other 90% loaned out to someone buying a house, starting a business, paying for college. Your $1,000 becomes someone else's loan the moment it hits the system. This isn't a scam, it's the engine of modern growth. That multiplied money becomes new homes, new factories, new jobs, new businesses on your street. Without this system, most people could never get a mortgage, a car loan, or startup capital. It's why economies grow faster than the cash sitting in vaults ever could. But this whole system runs on one fragile thing: trust. If every depositor showed up tomorrow demanding their cash at once, the bank couldn't pay everyone. The money simply isn't all there. It's called a bank run. And history shows that once panic starts, it spreads fast. That's why every country has a backstop, a central bank. Think of it as the control room for the entire money supply. By raising or lowering interest rates, it can slow this multiplier down or speed it up. Tighten the loop, and borrowing gets expensive. Loosen it, and money floods the system. In extreme moments, like a financial crisis, central banks can go even further and create new money directly, a tool called quantitative easing. Trillions of new dollars can enter the system almost overnight. It can rescue an economy on the edge, but it also means more dollars are chasing the same amount of stuff. And that's the trade-off. More dollars chasing the same goods means each dollar buys a little less. Your coffee costs more. Your rent creeps up. Your paycheck feels smaller, even when the number on it didn't shrink. This is inflation, the quiet cost of a multiplying money supply. This is exactly why alternatives like gold or crypto exist. Assets no single institution can multiply overnight. Gold is physically limited. Bitcoin was coded with a hard cap. Whether or not you trust them, both were built as direct responses to this exact multiplier system. Here's the real twist. Gold, dollars, Bitcoin, none of it has value on its own. Every single one only works because enough people agree to believe in it. Money was never really about metal or paper. It was always about trust wearing a disguise. So what do you actually do with this? Understand that cash sitting idle quietly loses value to inflation. Understand why interest rates move your mortgage and your savings account. And understand that the safest move isn't hiding from the system. It's knowing exactly how it works. The economy isn't magic, and it isn't random. It's a machine, and now you know how it runs. If this changed how you see your own bank account, subscribe to Margin Call, because next week, we're going deeper into the machine. What really happens when a central bank decides to raise rates? See you then.